G'day folks, welcome back to Pete's Investing. It's March 12, 2024. This is the Bitcoin analysis. We're still in a pretty strong bullish trend, although there is some signs of a retrace. So let's see where that may eventuate. So first, again, for those new to the channel, we've got three charts. We've got the weekly, daily and hourly charts. So what we look at here at the bottom is the ADX 25, and all three timelines are showing a bullish momentum on the ADX. The CCI 150, we've got two purposes for this, and the first main one is the trend, and you can see there it's bullish on the where that CCI is above those moving average bands. That's bullish. It's also bullish on the daily, but it's broken down to a bearish movement on the hourly. These moving average bands on the CCI you can find in the description below. There's a video on that and how to draw those if you want to interested in doing that. Also, I've got here some these arrows. Let me just first of all. Let me blow up this one for a moment. I've got these arrows you can see there over the long haul. That helps identify tops and bottoms. And again, I've got that video in the description below in terms of how to identify those potential tops and bottoms. It doesn't always mean a full reversal, but it does help, especially if you've got signs. In this case, for example, there was a bearish divergence versus the higher highs on the price. It was telling you to be careful about going long, and it eventually did break to the downside. Then you had a few bullish arrows indicating a bounce from there, which it did. Now on the daily as well, while I'm here, you can see there I've identified with these little rectangles where those retraces have eventuated from the bearish or bullish retrace. You can see there's bearish divergence there. It broke down, hit our targets, another bearish divergence there, hit our target, and another one more recently. This is on the daily chart there. So again, the way I measure those targets, I take the previous low point before that retrace started. That divergence started, and I'll take the 23 to the 38% level as a target area, the minimum target. You can see there that perfectly bounced in that minimum target before bouncing off from there. Sometimes it doesn't always mean it's going to bounce from there. It could mean actually breaks through, and especially if it breaks below the 61%, we always look at it as a reversal potential. So in this case, it's actually bounced higher. And if I draw another Fibonacci retracement back here, this one is also, I believe, back to that high. You can see there 23, 38%. Hit that target area just below it actually, and then it bounced from there. So again, had it broken below the 61%, it would have been a reversal potential. So again, those two Fibonacci's eventuated as a bounce from the 23, 38% level. Now what I've done as well is, if you look at a Fibonacci expansion, first of all, let's go back to this one here and draw it up to that high. Bring it back to that low. Along those lows there, you can see there, if I zoom out, if I maximize this, you can see there it's hit the, just those wicks have hit the 138% Fibonacci extension level. And if I draw another from that low to that high to that low, there's a Fibonacci extension. That's also currently resting at the 138 expansion. Doesn't mean it's going to reverse from there, but it's sort of, you can notice there the Fibonacci's are always key. You'll notice there the 100% it paused for a few number of days. 123 it paused, and at 138 currently it's sort of pausing there just above the 138. So it doesn't always mean it's going to turn down from those areas, but they're key areas to look out for in terms of where the market's going. Now if we look at the, let me just restore this. So again, the way I like to trade is looking at the weekly and the daily, and I trade the lower time frames based on those trends. Now at the moment, the hourly, if I zoom into that, the hourly is showing a bearish divergence on the CCI. It's also breaking through and below its moving average band versus higher highs on the price. Now I've drawn a target area there, and that area is between that Fibonacci low to that high, and that's a 23, 38% level. So that's where that's a minimum target. Of course, it could go higher, but for that to work, we need to see the CCI break higher than that area there, in which case we'll see the price go higher. Also, I haven't noticed any resistance yet, so there may be further upside to go on Bitcoin, but at the moment, I would wait until this breaks above the moving average band to take further long positions if that's your preference. So again, as a trading idea, again, we trade in the direction of the higher time frame. So this is these two charts on the right, the green and the pink chart. their 1 hour charts, and this one on the left here is a daily chart. So preferably when the weekly and the daily are aligned and going long. At the moment, the weekly and the daily are both showing bullish movement on the CCI. We take long trades. And just to demonstrate the performance, had a broken above the moving average bands at that point there on the 26th of February. You can see there on the two right charts, that's where I started the back test. So it would have taken, on the average down approach, it would have gone long during that period, likewise on the stop loss approach. Just to demonstrate one minor rule on the price chart, going long when this is a Fibonacci on the price chart, Heiken Ashi on the price chart, go long when a Heiken Ashi is green and go short when a Heiken Ashi is red. That's one entry rule. But the main entry rule is when the CCI on the daily breaks above the moving average band and goes short only when the CCI breaks below the moving average band, like in that point there. So in this case, had you traded long from that point on the daily chart, taking the long trades on the 1 hour chart, you can interchange this with any other time frame on the lower time frame, for example, 15 minute, half an hour, 2 hours, etc. I'm demonstrating here the 1 hour chart, but the same principle. Or alternatively, if you're trading daily on these charts, this method, this chart here would be the weekly chart or higher, maybe even the monthly. So again, you're going long from this point. The average down approach has generated 8,606 and the stop loss approach has generated 2,534. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.